Good evening. Banking reforms have been on the anvil for quite some time now, and the Parliament is also scheduled to discuss the proposed Banking Amendment Bill in the current session of Parliament. Foreign ownership of Indian banks, Indian public sector banks, is capped at 20%, and some global banks have been pitching for a hike in their holding limit to expand their presence in the Indian banking sector by acquiring smaller regional banks. Analysts see the Banking Amendment Bill as a positive step towards reform, and Parliament is expected to approve amendments to banking laws that include raising the limit on shareholders' voting rights in public and private sector banks. Banks, on the other hand, especially public sector banks, are staunchly opposed to some clauses, and as a result, 1 million bank employees began a two-day strike on Wednesday to protest against these reforms, with the contention that they will give investors more clout in the tightly controlled sector. If Parliament approves the changes and the limit on the voting rights of shareholders in private sector banks will be raised to 26% from 10% now, and to 10% for state-run banks from just 1% right now. Tonight on The Big Picture, we discuss banking reforms in the country. We will try and understand the fears that bank unions have expressed, and we'll peruse the banking bill itself. And joining me tonight will be Jagannadham Thunuguntla, equity head at SMC Capital. Also joining us will be Mythili, Bhusnurmath, consulting editor at the Economic Times. Also connecting with us will be Renu, Kohli, former member of the IMF and the RBI as well. Completing the panel will be Tapan Kumar, senior leader of the CPI-M. Welcome to The Big Picture, ladies and gentlemen. I'd like to start with Jagannadham, if I could. Jagan, the bill which was first introduced in the Lok Sabha in 2005, it lapsed when the 14th Lok Sabha collapsed. It proposes to help banking companies raise capital for expansion of the banking business. It removes the ceiling of that 3,000 crore on the amount of authorized capital that nationalized banks can hold. On the face of it, Jagan, it would be a positive step for the banking sector. Your thoughts on the proposed amendments, first of all?
Absolutely. Especially being from capital markets, I don't have any doubt in saying that this will be a positive step towards the reforms, and I'm sure from the attracting the global money, this is very, very needed. And moreover, banking is the epicenter or the lifeblood of the entire economy. Until and unless the banks are healthy, it is very difficult to expect that spillover effect onto the other sectors of the economy. And if the banks, we have seen the NPA fears that happened across the board, so they need more and more capital infusion to make them healthy and stable. So to that extent, I think we need these reforms at any cost.
The same question I'd like to put to Mythili, who's also joined us. Mythili, welcome to the show, first of all. Your thoughts on the proposed changes, proposed amendments in the Banking Laws Amendment Bill. Do you think it'll be a positive step for the banking sector if these reforms, these amendments pass?
Well, it certainly will be a positive step, Athar, but let's remember that the banking sector has been treated all over the world as quite distinct from other sectors. So to that extent, you have many other regulations which don't apply to other sectors. For instance, any time more than the shareholding of any one person, any promoter or any group crosses 5%, then you have to take Reserve Bank of India approval. So even if you do raise the voting share, it really does not really mean that anybody can go up to 26%, any shareholder can acquire up to 26%, because any time any shareholdings crosses 5%, you have to have the RBI's approval. So yes, this is an enabler, but precisely because the banking sector has systemic implications, it can bring down the entire economy, as we're seeing now with the present crisis, which began with just the collapse of a single bank in the US, Lehman Brothers. So all over the world, every country treats banking as very distinct. So this is an enabling factor, certainly. At the same time, the central bank, or the Reserve Bank in our case, which is a regulator for banks, has to keep its eye on the ball and ensure that the shareholding is with the right kind of people. Fit and proper is a phrase that is used internationally, and that is what the Reserve Bank is also concerned about.
Absolutely. The RBI will have a big role to play in case these reforms do pass. I want to get Renu, Kohli in the discussion before I go to Tapanda. If passed, Renu, it will allow an increase in voting rights in private banks from 26% to 10%. It will also pave the way, like Mythili just said, for the RBI to issue licenses as well. Banks, especially PSU banks, however, Renu, are staunchly opposed to the idea. Do you feel that giving more rights to shareholders would affect the running of the bank in a negative way, like the bank unions claim that they would?
No, I think that the union's fears are unjustified and baseless, because if you just go back a little in time, say about 1.5 decades ago, Indian banks, especially the public sector banks, were actually made to list on the market. And therein, there has been a dilution in their shareholding in any case. And that has been to their betterment. Governance has improved. And this is a singular experiment. I do not know of any in the world where there has been no privatization, but the public sector banks have been subject to market discipline and market norms. So I think that their fears are unjustified, and they must also take into account the fact that there are two key reasons as to why this move of the regulator and the government is forthcoming. As Mythili and the other guest said earlier, that it is to enable them to expand. There are two factors which are needed for the banks need to expand. First of all, the economic base of the country itself has expanded considerably with strong growth in the past 1 decade. So they need to expand their capital base. And secondly, India is also, like the rest of the banks and rest of the countries all over the world, are moving to a new regulatory regime which is called Basel III, and that requires further capitalization of the banking sector in order to strengthen them. So from both counts, capital is needed, and this is the one way of doing it.
Right. I want to get Tapan Sen's thoughts on this. Tapan, my other guest seems to think that the bank unions, their fears are unfounded. Would you agree with that? Have they gone overboard by staunchly opposing the reforms?
Probably I am the only odd man out in your present panel because I fully subscribe the view of the bank employees, 10 lakh who struck for 2 days to resist this kind of a retrograde exercise on the country's financial sector. As per my perception, my friends in the panel may not be agreeing with that. Yes, this bill is making an enabling provision to further deregulate and finally privatize and link with the same irresponsible bunch of bankers in the Europe and the West who has frittered away public savings in bank by reckless speculation. So I think this present process is an enabling thing. This thing they could not do, the UPA government in its first term, because they have to depend on the left, and we are opposing hellbent to this exercise. Now if it will be done, I think it will, number one, pave the way for foreign takeover of the Indian private banks. Number one. Number two, they will pave the way for more private and speculators' intervention in the public sector banks by way of, since their voting right is being increased up to 10% and where 26% FDI is allowed in the banks. So in that kind of a situation, as we see now, the government of India entering into the investment treaties with around 92, 93 countries in the world is committed to protect the interest of the foreign investors in Indian soil. So in that way, through that route, even the 1 or 2% foreign shareholder can intervene in the policy making on national priorities by the country's banking sector, as is seen in the case of Coal India, that an 1% shareholder are litigating against and trying to put the whole fuel supply agreement between Coal India and power sector into ransom. So these possibilities will be much more with serious ramification for the entire economy when it comes in the matter of banking sector.
Tapanda, so a little follow-up question for you, sir. Tapanda, the argument that analysts give is that by increasing the voting, the shareholders' voting rights, the best thing that can happen to Indian banks would be that transparency would be ensured. Would you not agree with that? Wouldn't getting more fund managers and foreign banks increase the transparency of our banking sector?
You see, the fund management in present-day economic scenario is basically hovering around the speculative activities. More important for the country's economy and the priority for the country's economy that the banking sector capital, which is basically comprised of the savings of the common people of the country, not the big corporates are supplying capital to the banks. It is the common man saving to the tune of 35% a year. Considering the capital, that should be channelized towards productive investment route instead of speculative route. And in this new bill that is awaiting passage of the parliament, you are also providing way for forward trading in the banking sector,
Right.
legitimizing that, promoting that. So in that kind of a situation, I think the whole banking sector reform has to be
Right.
looked into comprehensively
Tapanda.
with all its aspects.
Right.
So the private shareholder's voting right, by which you like to bring the transparency.
Right.
If the private shareholder in the banking system are all hedge funds and mutual funds.
Point taken.
We have been an inclination to speculation. It is not going to serve the national interest. In
Point
any
taken,
manner
Tapan.
whatsoever.
Point taken. We'll come back to that. Before we go into a small break, I want to ask a quick question to Jagan. Jagan, you heard what Tapanda had to say. The proposed changes in the banking laws, analysts like you, experts like you, say they can improve the health of the banks considerably. Bank unions, on the other hand, fear that if the government continues with the reform, their positions will weaken and will lead to job losses. Do you think, very quickly if you can, very quickly, do you think the banks, the unions have a valid argument?
2 points. One point is when the UPI 2 came, in the introductory presidential speech in Parliament, clearly laid out that in PSUs, the government holding will not go below 51%. That means it is clearly established that the government will continue to be the controlling stakeholder. To that extent, the fears are need not be there. The second factor is that if we fear, even a 1% holder like Children's Fund in Coal India can create issue, then we shouldn't have allowed the companies to list in the first place, because 100% should have been with the government. If we allowed that, how much it will make a difference whether they hold 20% voting rates or 22% voting rates. So once you've opened the game, so we have to be playing along with the rules of the game.
Hold that thought. This debate is just getting started. We'll take a small break, come back. We'll come back and talk to Mythili and Renu Kohli as well. Keep watching The Big Picture. Welcome back to The Big Picture. Let me go right across to Renu Kohli first and ask her this. Renu, FIIs, foreign institutional investors, will also benefit, say, experts and analysts if the amendments are passed. Now, would you say that the FII interest in the sector would grow if the reforms go through? And wouldn't that be yet another positive, since investment would also go up automatically? And the government has time and again said that, reviving investment, especially in sectors like banking, is top priority.
There is little doubt about that investment would be attracted, and one of the key stumbling blocks which has been impeding investments into the banking sector has been the fact that the shareholding the shareholding extent has not been aligned to voting rights. Now that goes against the basic principle of ownership and under corporate law, and there's no reason as to why that should not be rectified. So it's a good move, and there's little doubt that one of the key obstructions to attracting investments, whether foreign or private capital from within the country, will be removed by this amendment.
Right. Mythili, you just heard what Renu said. Do your thoughts lie in the same direction? Would you agree with Renu?
Athar, what I would say is that, as I said earlier, this is just an enabling provision, because the way the world economy is at the moment and the way our Indian economy itself is performing, I'm not sure there will be that many foreign institutional investors really dying to come into India. But certainly it is an enabling clause. In the past, they could not invest because their voting rights were not aligned, as Renu said, to the shareholding. Even now, in fact, the voting rights would not be aligned. But again, there is a cap. And as I said earlier, there is a 5% ceiling also, beyond which any change in ownership of beyond 5% has to be okayed by the Reserve Bank of India. So there are still many caveats, rightly so, but certainly it will be an enabler, and as and when the global situation improves and the Indian economy also starts looking a little bit better, then maybe you will find foreign investors looking at this banking sector.
Right.
But at the moment, even if the law is passed, I doubt you will find too many takers.
Right. Jagan, Mythili thinks it will be a great enabler, but FIIs won't really be looking into to coming into India because the global environment is such. I think you have slightly different views on the matter.
I think money will come. I think money has a tendency to chase opportunities. I think it may not come in like multi-billion dollars, but I'm sure the healthy money will come. And eventually, even if there is a little bit of revival in the economy, I'm sure loads and loads money will be waiting for. And moreover, many of the global banks do think if at all any growth comes, it has to come from India and China. And moreover, one more interesting point is that as a initially said that banking is the epicenter of the whole activity. If you are there in the banking, then technically you are betting on India and India's economy. There is no other sector which really translates into the same level of integration or same level of reflection of the entire economy.
Right. Tapanda, I would like to ask you one question on FIIs. I know that your position on FIIs is slightly different from my other guests, but my guests seem to think that money will flow in. Money has a tendency, like he said, to chase opportunities. Wouldn't that be good for India if FII money comes into the banking sector, even though Mythili says that it's just an enabler and she's not very sure whether money will come or not? If it does come, won't it be good for our economy, especially the banking sector? Tapanda?
No, I don't believe, because I believe that foreign companies, I don't say FII only, through FII the foreign entities will come and grip over the banking system of our economy and play with the savings of our people's saving, which basically constitutes the capital base of the bank, for other purposes, for multiplying, for making their gain, profitable gain purposes. And nowadays, in the whole scene, productive sector vis-a-vis the speculative sector, there is a tug of war throughout the world where the money is flowing and there is a tug of war between these two sectors throughout the world. And I don't know who the architects of Basel I, Basel II, Basel III, those countries by themselves, by their own acts, have destroyed their banking base, which finally government has to bail them out through public exchequer, and through that the corporate bankruptcy was converted into the sovereign bankruptcy, creating further crisis in those countries.
Right.
After this international experience, going into the same formulation, it is something really surprising for me. And secondly, another aspect has to be taken into account. I don't know how do you feel about it. The restricting the voting right of the shareholders was a conscious decision, political, economic decision, when it was taken place with a particular perception regarding country's development in mind. There is no reason, if you consider them, they are fools.
Right.
That today that restriction should go and that defect should be repaired. So what is important is the perception undergone a change. Those who are of the policy making in the name of integration, they want to take the country in the same speculative way. Here the workers, people, organizations have a specific point to make, and definitely not only to convince the policy maker, because they are beyond that convincing limit.
Right.
They are doing with their perception. We are here to assert our thing, to stop and resist that.
Right. Tapan, I'll come back to you. I want to get Renu and ask her a macro question. Renu, this is a slightly more macro level question. The banking sector has done reasonably well, or comparatively well, as compared to other sectors during the past 2 years. That's what the figures tell us. How important are banking reforms at a critical juncture when India is trying to fight a global slowdown? On a macro level, how important is it for the country that banking reforms do come in at this particular juncture?
You're right that the banking sector has done well, and major reason for that is that, which is something which I would like Mr. Tapan to take note of, that Indian banks have been very well regulated, and the central bank is more of a cautious and a conservative regulator. So that said, I think that the banking sector reforms, especially the voting rights alignment and augmenting the capital base, are in any case delayed. And as I mentioned earlier, the need of the hour is that they need to fund economic activity, which has expanded considerably. Also, the capital requirements under Basel III will increase significantly after 2 years, and Basel III itself addresses it's a post-crisis response at a global level to strengthen the banking system. So it addresses not just systemic risk, but also firm level risk, which is at a bank level. So given the nature of the risks that it seeks to address, capitalization is a very important element of that. At this point, it is very important because the government has no money, and all over, actually at a macro level too, there is a shortage of capital in the country. we have an internal deficit and we also have an external deficit. So how do the banks get capitalized is the question.
Right.
The government has already said about 6 months ago.
Right, Renu, we'll
May I
have to,
finish?
I'll have to.
Or have I run out of time?
No. Please complete it briefly if you can. We'll have to take a break after that.
Okay, briefly, the government has said that it will meet part of the capitalization out of its budgetary resources. Part of it will be met by the banks raising the capital from the market, and part of it is to be met. I mean, it's an idea which is under consideration under a high-level committee of the government,
Right.
which is that they're thinking of forming a financial holding body which will raise capital and in turn capitalize the banks.
Right, point taken. We'll take a small break. I'll come back after the break, and I'd like to ask Mythili Bhusnurmath her position, her thoughts on something else that also concerns banking reform. That's, of course, giving licenses to private financial institutions. But that's after the break. Don't go anywhere. Keep watching The Big Picture. Welcome back. We're still discussing banking reform in the country. We'll also discuss in just a bit the strike that has crippled bank transactions as well, especially in the capital. Before that, I want to go to Mythili Bhusnurmath and ask her, Mythili, giving licenses to private financial institutions to open new banks, where do you stand on that exactly?
Well, Athar, I think there has been a demand for opening up the banking sector again for new banks. And I think there the issue really is, do you want to give it to corporate houses? It's not so much private financial institutions, because the idea is that since banking is a very special kind of sector, neither fish nor fowl, and with this amazing ability to bring down the entire economy with it, which is why we talk about moral hazard, too big to fail, using taxpayer money to bail out banks. So in that particular context, I think the issue really that is kind of the key issue right now, when you're talking about allowing new banking licenses, is do you want to allow private corporate houses to enter? And if you look at our history, the reason why banks were nationalized was because the private corporate houses were misusing the license that was given to them to raise money from the public and lend to their own associate concerns. And given this kind of history of ours, and given the experience all over the world, most countries have been very circumspect about allowing private corporate houses to enter the banking sector. And I think this is a very justified caution. So in the Indian context also, I think the Reserve Bank has its reservations, which I entirely support. So I think banking particularly, share ownership should be widely diversified. It should be held by public institutions as far as possible, and if at all, by private financial institutions also, but widely held, not with private corporate houses.
Let's get a view from the markets as well. Jagannadham is still with me. Jagan, where do you stand on licenses, new licenses? There has been some debate. Where do you stand on that?
It needs to come. I think if we see some of the entrepreneurial ventures like S Bank, which came about 6-7 years back, has definitely shown the way about how the business can be taken.
It is a successful model as far as we know.
Hugely successful. I think probably now all set maybe 2-3 licenses can be expected. I think as rightly said by Mythili, it will be corporate houses, not necessarily the financial institutions. So corporate houses will be there. I think Indian businessmen have shown that they can do well in automobiles and telecom companies and oil and gas. So I think the same guys can translate some of those entrepreneurial gene into the banking as well.
Right. Let's talk about the banking strike as well. Wednesday, which was yesterday, and today as well, major PSU banks went on strike. I want to ask Tapan Sen this question. Tapan, 1 million employees around the country on strike. Banks are incurring losses. There seems to be no headway in the talks with the union as well. Is there perhaps a compromise formula in sight that can be reached that will allow the government to initiate reform, but keeping in mind the concerns of the bank unions? Do you see such a compromise formula in sight?
On the reform issue, the government must speak to the employees, their organizations, and here they take into account note their views also. The issue is that we have there must be a meeting of perception where there is a wide difference. So far as the employees are concerned, that issues to be separately negotiated. It is not merely the working or job security of the employees which they concern to be at stake. These reforms will, as per the union's perception, will also severely damage the pro-national character of the country's banking sector, keeping in view of which these banks were once owned by the big corporate houses were nationalized, so that the people's saving is channelized to developmental route and not any other route. Now you are giving licenses to even private corporate houses.
Right.
I don't know, they are opposing, some Reserve Bank has got developed certain cautions, but the ministers are recklessly making statement in that direction. The same private corporate houses who kept 3 lakh crore rupee tax unpaid every year, the same corporate houses who contribute to the non-performing asset of the bank to the tune of total non-performing asset, I understand more than 70% comes from the big corporate houses.
Right.
And you are expecting from them
Right.
that they will take over the savings of the people
Right.
for making benefit to the people.
Right.
Is it at all believable?
Tapanda, I'll have to stop you there. We have about 30 seconds to go. I'll give the last word on the show to Renu Kohli. Renu, very quickly, very briefly, we have very little time left. Bank unions have been demanding pension revision, housing loan revision, 5-day work days, other issues as well. Perhaps if these concerns were met, then perhaps the clamor that is growing for stopping the reforms perhaps would ebb or subside. Do you see such a scenario where other concerns of the bank staff and the bank unions are addressed so that reforms could go through? Do you see that happening at all? Very briefly, ma'am.
The two are quite disconnected actually. One, revision of salaries and pensions is a human resources issue, whereas banking sector reforms is quite different. It does take to, increase their ownership elsewhere, but the government's been said very clearly that the public sector character will be retained. So I don't see the connection,
Right.
and I don't know whether it will mitigate it.
Right. Unfortunately, that's all the time we have, ladies and gentlemen, on the big picture. Of course, the market watchers seem to think that the reform is absolutely necessary as well. Tapanda, of course, I know will disagree. We need more time for such a debate. That's all the time we have tonight, though. Thank you all, my guests, for coming. Tapan Kumar Sen from the CPI-M, Renu Kohli, Mythili Bhusnurmath, as well as Jagannadham, Thunuguntla, for joining us on the big picture. Athar Khan saying goodbye, good night, and thank you for watching the big picture.